What's up, everybody? Welcome back to Earn It, Save It, Invest It. I'm going to give you the 4 stocks you should be watching in November, and these are also stocks you should be watching carrying into next year as well. But November, really keep your eye on them. It'll really do an impact on your portfolio. It will on mine. So yeah, just please go ahead and give a like and subscribe. And I'm going to break down the 4 stocks you should really be watching in November 2025 and kind of moving forward. First one, this is my account now. I have 7,000. I started with $7,354, and I'm trying to make it into $100,000. It's my road to 100,000 or my $100,000 challenge. So right now I am currently, as you can see, I am at $9,445.56. I am beating my current goal, but I have underperformed because of HIMS. HIMS has been a very laggard. Over the last month, it's gone down about 20 to 25%. So I've had a pretty bad month, but nonetheless, I think things will start picking up for me here soon. The number one stock, or not, this isn't in order, but my first stock that I think you should watch is going to be Adobe. Adobe has gone down in the last year 28%. In the last 6 months, 9%. In the last month, 5%. Right? In the last year, it's gone down 28%. It used to be topped out at 550 basically, and now we're looking at about 350. That's a pretty significant drop for a really big company. So I kind of want to go into it. Let me see. Adobe, their financials are good. This is a company doing a lot right, yet going nowhere. Adobe remains fundamentally strong with record revenue and profitability, yet the stock is down 25% year to date. The AI integration, especially through Firefly, is impressive, but user experience issues and competition from Canva and Gemini hinder broader adoption. Despite robust cash flow and efficient operations, slowing revenue growth and market skepticism have compressed Adobe's stock valuation to half its historical average. This is pretty big right here. Maintaining a hold rating, they see better short-term opportunities elsewhere, but they will revisit Adobe later on. So essentially they're saying, like, look, they're doing well. They have things, in place, but they're just not necessarily performing well. Now, here's the thing is that I use Adobe all the time. I use Adobe to edit all my videos. I'm a video editor for Fox Sports. We use Adobe Premiere. We use After Effects. We use Photoshop. We use all that stuff. I've used it even before I worked there. I was using it for side stuff. So Adobe is really big in the terms of professional and industry standard. And once they really get their generative AI going, once they really start getting things going, I think right now they're also paying, they're spending, right? People are in the spending mood or spending mode by investing in AI, doing all this. Eventually, I think 2026 is going to be the year of who's going to make it, right? Who's going to actually start really bringing in money from AI, right? We've been now like at least 2 years of just throwing money at AI. Eventually, we have to start seeing some kind of returns. Some people have to, spend a lot to make a lot. Adobe is actually one of the companies that doesn't have to spend too much to make a lot. Let's go over the numbers really quick. Revenue, it's continuing to go up, right? Year over year over year over year, right? Continuing to go up. Earnings per share, this is their the estimate, and this is what they actually did, right? And what do? They beat every single time. I'd put money, they're going to beat this, and they're going to beat that. That's just what I would predict if they've done that already quarter after quarter after quarter. Earnings estimates are expecting them to grow at a decent rate, nothing too crazy. This is not a growth company. Let me go into this camera. Now, the growth is year over year, about 10%. Now, you have to understand that's the revenue. It's not great, obviously, when you look at other industries and other companies and businesses. They do a lot more, but that's because this is, like I said, it's not a growth company. Its forward PE right now is 21, 16 and 21, right? Depends on non-GAAP or GAAP. And so that's pretty low. These are really low, right? The profitability, the margin, right? Their gross profit margin is almost 90%, and their net income margin is 30%. That's pretty good. That's a really good, profit margin right there. Yeah, I think that's good. I mean, obviously it could be bigger, but that's good. And then we have all this other stuff right down here. Let me see if there's anything. Total cash, 5.95 billion. Total debt, 6. Right. So I don't like the balance sheet too much, but I think they're gonna balance out a little bit better here coming. The income revenue, 23 billion. Gross profit was 20. Their net income was around 7. And so the EPS diluted was around 16. What I think the biggest thing about Adobe that's going to eventually catch up is this right here, right? The fact that it's trading at such a low valuation right now for what it usually does, I think that's going to come back and it's going to do something positive for the company. So let's see here. I'm going to try to go to trade view, which I cannot. I'm trying to get to trade view here. Oh no. There we go. All right, so Adobe right here, as you can see, it's just kind of fallen off a cliff, right? I mean, when you look at the 1 year, it fell from what, 500, 550? It topped out at 630. I mean, Adobe right now is on a path of going, it is on a 46% decline. A 46% decline in stock price over the last 637 days. I don't think that's going to last. Obviously it went through this. I mean, it topped out all the way at 700 with that real big boom. But I mean, you look at Adobe right now, and you're going to tell me that today the numbers are worse than what it was right before COVID? No way, right? This company is better than it's better today than it was 2,113 days ago. This company is better, it's doing better, the numbers are better. Why is it this stock price, right? I feel the best way to make the most money, not necessarily the easiest money, because it can be kind of stressful when you're buying something down, but it's going through a slump. But if you have confidence in a company, you have confidence in the numbers, and it's abnormally, it's doing something abnormal, right? It's historically trading at double this valuation. So why is it doing, right? And it's not like going through it, the fundamentals are fine. So, it just seems like Adobe's going to be able to get through this, and sometimes catching the falling knives is how you make the most money. So I'm going to really start buying into Adobe here, probably up into the 400, and then maybe stop. But I'm going to start putting money into Adobe more and more. And so I think you should just keep your eye on it. I don't think it's going to go into the 200s. I don't think it's going to dip under 300 into this area. So just keep your eye on it in November, right? Because I mean, the earnings come out December 11th, right? December 11th. So we're not going to catch anything from the earnings into the stock price, really. So it's going to be market oriented, where the market's going, what the market says, that's where Adobe will kind of do. Here's also the thing too, you have to understand too, tax loss harvesting, right? These people who have lost money on Adobe are going to be selling the stock so that they can take that loss off their taxes. So it's I don't want to say very likely, but it's very probable. It's possible that Adobe can just keep going down for the next 2 months because people are like, look, I already lost money. It's not, even if I make a little bit back, what am I really going to do? It's not going to go anywhere. I'm going to sell it. I'm going to take the loss for my taxes, and then maybe I'll revisit the stock January and February next year. That's what people will do. So, yeah, I think that Adobe is a really good stock, but I don't know if it's going to be able to grow over the next 2 months because of tax loss harvesting. So that's my 2 cents, my 10-minute cents on Adobe. Now, my next stock is going to be Hims. Hims has been it's been a big one for me in my portfolio, right? Hims is my biggest weighted right here. It's now my second lowest performer though. It's dropped a lot lower. I had Hims at 200%. It was at 200%. It was at 64, and now, and I could have sold at that time. Maybe I should have, but, I've also played that game before where I'm like, oh yeah, I could just, no, I took a little bit off the table, and now I'm sitting on a little bit more cash in case I want to unload on something. But, I do think Hims is going to be an interesting watch because look at this. When you look at November, it's its best month. It's its best month, right? And you look at it's typically, it's just gotten higher and higher, right? 2021, it was at 16%. 2022, 36. 2023, 48. 2024, 71. Now, what is it going to fill here? Is it going to continue to go up? I don't think so. I don't think it's going to continue to go up in terms of this number, but I do think this could go up 50%. I think this could go up 30%. This number is going to be about a 25, something like that percent over this month, 22%. So all of this year has been a pretty big year. Every month has it's put up at least double-digit gains or losses. So I do think, I definitely think November is going to be a really big year for Hims, or a big month. Sorry, for Hims. Whether it goes up or down, but over the last 5 years essentially, November has been the best month. Now we're only going off 5 years of data. It's a new company in that sense, so nothing really too strong to hold on to in that sense, but November does seem to be the best month for it. So I'm looking at that. Now here we go. You're looking at the revenue. I mean, the revenue is just growing and growing and growing, right? It's growing really fast. It's growing and it's slowing down a little bit, right? As you start to grow, it's harder to continue to grow at that same rate. And then they had their whole weight loss drug situation go on, so it's not as high as they'd want it to. But when you look at the EPS, obviously they completely beat back here in last year, and then they've continued to beat. So I'm hoping that they continue to beat. You look at their earnings estimates, what they plan for it to grow. It's going pretty well. Let's take it back to this one. The valuation gap is at a 55, so it's not a cheap stock, right? It is not a cheap stock, but the revenue growth is at 88%, right? When we looked at Adobe, it was 10%? Hims is 88%. That is pretty big. Profitability, the gross profit is 76, but the net income is 9, right? So when you look at the difference between Adobe, even though it had 89%. This net income, the 30%, that's huge. And the reason why is because Adobe is a software company, right? Adobe does software stuff, and they're not putting money into actual physical products where Hims actually has to do physical products. So that does make it harder for Hims to profit. But nonetheless, it is growing a lot faster. We've had some insider selling and buying. It's always going to happen. So a bunch of these are already, planned, they're pre-planned before, and then they're announced, and everyone freaks out, like, oh my gosh, they just sold all that. Well, yeah, it was planned for a while, but once it actually gets sold, then everyone starts to kind of freak out. Income statement: the revenue is $2 billion, gross profit 1.5, net income is 193. So not the greatest, but they're growing again. The cash 1.14, total debt 1. So they're doing okay. The total cash per share is about $5. Total debt to equity is 185. So you want to have a better balance sheet. You want to have a lot more cash and assets than you do to debt. So it's harder for a growing a company that's young and trying to grow to have that. So if we just kind of go over, let me see, HIMSS. Okay, so this is HIMSS. Now, if I'm being honest, I think it's going to be a buy. I'm going to leave this mark. I did this before. Where is it? Right here. Rectangle. I think if it gets in this range, it's a buy. If it gets back to this range. If it starts pushing up, then you hold it. If it starts pushing into the 30s, you can buy it. I think you can buy it. I don't think it's going to go all the way to February. I think if it stays in this, you can buy. As you can see, it's kind of like, it's kind of bouncing between the low 60s to, the low 40s. So it's kind of a big range that it's bouncing between right now. And that's the pattern that it's kind of doing right here. We had like just a straight mountain, right? You're just going up the mountain, and then a little bit more of a consolidation, right? We're consolidating now. We're consolidating the stock. We're figuring it out. They have the big weight loss drug issue kind of happen. So figuring it out, I guess, HIMSS is. And so, yeah, I would definitely say HIMSS would be another stock to look at because it seems like it's going to do something. November is the biggest month. It's been double-digit performer, whether it's up or down. So definitely take a look at that. Meta, number 3. It's gone down. Just this last week, it's down almost 14%, right? 13.5%. They lost $73 billion to VR. And then they had a tax, a huge tax. What was that? That was like $760. It was a pretty big tax hit that they got. I forgot exactly how much it was. Here it is. They had, where is it? Where is that tax? 15 billion, almost 16 billion tax charge, right? And then they're ramping up their capital expenditure by 6 billion, so now it's in the range of 70 to 72. It's just they're performing well. They're growing 26% year over year in revenue, and they're still one of the biggest companies in the world. I 100% believe that if your favorite artist, your favorite team, whatever it is, you will be seeing in VR more. Like, they're gonna get the technology down. Our eyes are gonna get more used to it, just like they've gotten used to the screens and the way they're gonna adapt. It's not gonna happen right now, though, right? In 10 years, yeah, but it's not happening right now. But I do think they're gonna be the leader in that technology. And they're going to have a lot of data to work with, but nonetheless, they're making money. Meta is making money, right? They're making plenty of money. November is typically a good month for it, right? 70%. Let me go back to this, right? It's typically 70% a gainer. So, and again, when you look at these numbers, it's usually not moving up too much, right? Obviously, we had big numbers in 2022 because it was just everything was kind of crashing, and then this is when it started to recover, right? And then you can see 2023 it just continued to grow. I do expect it to go up, but again, the market right now is being a little tricky. So I was expecting a slight correction, and it's not correcting, so I don't know what's going to happen. But here we go. It's just they're estimated to keep growing and growing and growing, and that's what they're doing. Here you go, the estimate, and what do? They beat it. Estimate, beat, estimate, beat. They keep beating every single time on their earnings per share. The valuation is an F, which is actually kind of crazy. It's gone down 13-14%, and it's saying it's an F. I don't even know, honestly, what can even get you a good valuation unless you're like in the tens and you have good growth. Like this, I don't like the way they do their valuation. The growth at 22%. That's great. B minus or profitability. Now remember, this is a software company. They do some physical products with the Oculus and the Meta, the Ray-Bans, but they're almost at 31% net income. That's great, and they're at 82 gross profit margin. They also give out a dividend. Their total debt is 51 billion, and the cash is 44 billion. So I don't like that. We're gonna see that a little bit more down here too, right on the balance sheet. I don't really like that, but I do think that their company is going to be able to get through that totally fine. The revenue, 189 billion, and the gross profit 155, and then they netted 58.5. Again, Meta is just a really good company, and it continues to grow. And the thing is, we all use it, right? I mean, we're all using Meta in some way, shape, or form, right? Meta, Facebook, the Instagram, the WhatsApp. I'm sure there's all kinds of other companies that they own and use or have and manage that we use and we don't know it. So they have a lot of data, a lot of information on us. When you look at a stock like Meta, whenever it's had a crash like this, it's meant two things: buying opportunity or an alarm, right? Meta is either telling us buy Meta, because we're going to bounce back up, or hey, this is the beginning of something. I've been predicting the beginning of a 10% correction here soon, so that's why I'm like, I don't really know, but I bought some. I bought a little bit. I do $50 every week, and I use my whole $50 on it this week. So, I did that, and I believe in Meta. I do believe this is a buying opportunity. I do not believe that this is necessarily the beginning of something like this, right? And when you look at this, it had a pretty significant, this is a significant drop of 1 day. 1 day. Look at that. You do not see any 1 day drops like that until you get to here, 2022. In 9 days, it dropped 35%. Are you serious? Oh my gosh. It dropped That's insane. That's insane to even think, right? That it dropped 75% over a year and almost a year and a half. That's crazy. And people were selling. This is what you have to understand. You have to understand this. People were selling. This is not just the stock was here. People were selling. So just because the stock has gone down does not mean it won't go back up. Just because people say sell the stock does not mean it's exactly necessarily the time to not buy or to sell the stock. But nonetheless, it went down a lot. So I bought a little bit. I would not say I'm a heavy investor in the Meta, but it's a heavy weighted position in my other portfolios. So I do keep an eye on it, and I do believe that it will come back, and I do wish I had more cash to really kind of throw down at it. But I don't. And so we're going to go over the last one, Palantir. Palantir, I do believe, is overvalued. We're looking at a 300 PE. I'm exhausted. I'm so tired just even thinking about that. First of all, I'm physically tired. Oh, man. Right? I had a long week. I owned Palantir and I sold. And I wish I hadn't. I didn't expect it to get to this high of a PE, but I guess that's what you can sometimes do when you have a good company, right? I wish I had done to Palantir what I had done with HIMS. Just take a little bit off the table, not the whole thing. Just because it's getting outstretched. It's a good company. I believe in the company. I do believe in Palantir. And I 100% am going to buy back at a higher price than what I sold, but I do believe Palantir is going to crash significantly, close to where I bought it. It will be about, I would say, 20 to 50% higher than what I sold it, but I'm going to buy it back at that range. I sold some in the 70s and I sold some in the 90s. So I do think it will hit the 70s to 90s. I think it will reach under 100 at some point. Depending on this, if we don't get any significant correction over the next year, Palantir can just keep climbing. But I think once we get a correction, once Palantir says anything, and Palantir's their numbers come out on, is it Monday? Let's check it. It's either Monday or Tuesday. Comes out on the 3rd. So the 3rd is a Monday. So, it's going to be interesting. Monday's going to be interesting. Palantir it's going to either jump up a lot or go down. And if it jumps up even more, I am just kicking myself. But what I'm doing more than just kicking myself, I'm kicking my brain. I'm trying to learn. I'm trying to teach myself what to do the next time, which is what I'm doing with HIMS. I believe in the company. Right? I like it now. It's a different business, right? Palantir, their profits are way bigger. SaaS company is just different. It's a different company, which is why I'm also like, what was I exactly thinking? But again, the PE was getting really big, and it's still big, right? It was at 150 when I sold it. I was like, yeah, that's pretty high. Now it's at 300. So. I did that with HIMS. I took a little bit off the table, but I didn't do everything. It can always go the other way, right? HIMS has been hurting my portfolio, whereas if I had just kept Palantir, it would have done nothing but give me gains. At the same time, I didn't know that before. For all I knew, at 150 PE, this thing could have been slashed in half, and then there goes a bunch of my money that I could have let me take my profits. But this is why it's really good to take as much of your initial capital out and then reinvest if you can. Because then it feels like you're just playing with pure profits, right? If I invest $1,000 into HIMS, which I had, and I had, taken out now $600, now I feel like I'm only playing with $400 into HIMS. And, how much do I have? I have 1,800, and so, it's nice. It's like, okay, instead of having a little bit more, but having my full 1,000 in there, I only have 400 in there. And if I took out 400 more, I'd be at 1,400 of pure profit. And now I could just let HIMS and be like, look, that's all profits. And then I take, my initial capital, and then I can put it into something else. And do this and that and let that grow. And then I can just take out my initial capital and then, just let the profits ride. That's what I want to start doing a little bit more. I feel like maybe I should have done that with HIMS. Take out, more. Maybe I should have sold 15, got to 35, sold an extra 5 at 60. It would have been 3. That would have essentially taken me to getting rid of all my initial capital investment and playing with pure profits. which would have been nice because then I would have had that much more cash to play with, and I would have lost less money in terms of, because it's been losing all of October. Not going to kick myself because, again, I do think it will go back up eventually, but you just have to learn from your lessons. Palantir, I'm trying to learn from my lesson. It's gone up significantly. I do think it will crash. How long until you break it? It's going to be a long time till you probably actually break even now, though, because like I said, I do think the stock it couldn't go up to maybe 220 to 250, but it's going to crash. It's going to crash to like 100. It's probably going to crash to 100. And when that happens, it's gonna just take a while for it to recover and go through. It's gonna go through this big long phase, and it's gonna take a long time for that stock to recover. So once it hits the top, I don't know when an investor will actually be able to break even. Just like HIMSS, very limited data that we can go off of, right? The best months of Palantir. October seems to be a really good month, and it did well this year. November, I mean, every month basically is pretty. I mean, look, March, April, and May are actually not good months, and December for a stock that seems like it can't it won't like stop moving up. Obviously, it's got some few bad spots in the year, but November's a 60% gainer, so it seems like it's more likely to go up than not, right? Let's see here. I mean, like, look at these revenue, right? I mean, these revenue estimates they just keep climbing and climbing. I mean, that is amazing, right? And they keep beating. Right here, they basically have the same, right? They met, but boom, beat. Keep beating their earnings estimates, their growth. It's looking like they're going to grow and grow and grow. Revenue growth is almost at 40, right? The EPS, they're growing at almost 80. This is crazy. This is just crazy. Their PE, I mean, this is deservedly of an F, but how is this? Like, they're giving Meta a what? They're giving Meta an F. This thing is 25 and 29. Now, I know it doesn't grow as fast, right? The net income is at 30. Palantir is at 22. What are we doing? How is this an F and Meta is also an F in valuation? The growth, now granted, I know it has a better growth, but Meta is obviously just a way bigger company too. So I don't understand that. And so, we have all this, we have the insider selling and buying. Nothing crazy really. Let's just go over some of the income statement, right? 3.4 billion of revenue, gross profit 2.75. They netted 763 million. And when you look at those numbers, they're so much different than something like, they netted $58 billion. $58 billion, Meta. Palantir netted less than 1 billion. Technically, Meta is over 53 times more, I wouldn't say more profitable, but they make 50 times profits than Palantir, right? They're making that much more. Not in percentage wise, but just in a whole. So look, Palantir is still growing really well. They're making all kinds of money for the amount that the revenue and the income. I get all this, but I just don't understand why Meta's getting hit so hard, why it still has an F valuation. Palantir, I feel like should be getting an F valuation, but if we just look at the stock. All right, let's go to Palantir. So this is where it's been. It's just been climbing up, right? Now, it did have this drop right here in August, and it took, a couple months for it to come back up, and now it's back up again. So it's going to be interesting to see how much further it can go up before this thing crashes. I think it can crash down to here. Like, that's not out of the question, is it? Is it really out of the question that it could drop down to here? Right? Let's zoom out. Right? I could see something like that happening. Right? Now, granted, I mean, you could see anything happening, right? I could see all kinds of patterns happening, but it's not out of the question for that to happen for Palantir. So that's just my take. You know, I don't know exactly what's going to happen in the market. Obviously, those are my 4 stocks to watch: Adobe, Hims, Meta, and Palantir. You know, just watch them. I think they all have potential, whether it's potential to go up or potential to crash. But yeah, just keep your eyes on all this. This is a longer video than I really anticipated, but I just wanted to get it out there. I did forget to put this video out about a week ago, so keep your eyes on this and keep your eyes on the market. You know, let's go over the market, I guess, just really quickly, because I mean, this thing is just non-stop. Right? I mean, I really genuinely thought we were going to hit a correction here. Now, as you can see, we're trying to reach it. We're trying to pass by this, right? This is the Qs. We're not quite getting there yet. We're not quite getting there yet. But I don't know. I have to expect something like this to happen, right? We got to hit a 10% drop. Eventually, this is going to happen. Now, 10% is putting us at 570. Right? When before I had it in the 540s, 530, you know. So we'll see. We'll see what happens. I don't know. Just keep investing. If you have kids, invest into them, put into an account, open a Roth IRA, do all that stuff. And yeah, thank you for anybody who's watching at all still. It's Halloween. I got off work late, so I'm just like, you know what? Let me do this. My kids they're sleeping at grandparents' house. They're doing stuff. So, yeah, you know, just keep investing. Do what you have to do. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities. And you can count on compounded interest.